Okay, so Adam, you were saying so valuations cycle back up. There's obviously, tariffs haven't completely gone away. The form keeps changing every other day.
Right,
But
but there's an impact. There's an impact that's happened. It's not in the price. It's not in the estimates, and so I think it's hard to get super bullish here, knowing that we're going to see some margin impact later this summer.
yeah, it's funny. Your former colleague, you were at Morgan Stanley the same time Jay Plosky was, or did you guys miss each other? I can't remember.
I don't know him. No.
You don't know Jay? Okay, so Jay is great. I think Jay was maybe before you. He was doing emerging markets, and we had Jay on a YouTube a couple months ago. It was hilarious. He said his superpower, this is a great line, is ignoring everything Trump says because he just wants to stay focused on the market, and Trump is just noise, And it's Simon says do this, Simon says do that, do this, do that, and so focused on the fundamentals, valuations.
Except for the part where he said buy stocks. That one you
Yeah,
didn't want to ignore. That one was
yeah, I
yeah
agree. I
yeah
agree. I agree. So, Adam, let's get a little bit in the narrative. I have to. I'm
yeah.
sorry. I can't resist.
Get in
So,
there.
like normally, when you see stuff like that, you've been around long enough. When you see politicians like buy stocks, or you have what's his face Lutnick saying buy Tesla, or Navarro saying you don't have a loss unless you sell, or you see the president coming out with a shit coin once he gets elected. History would show that usually it doesn't work out too well. And I'm sorry, maybe it's the bear in me, but I'm like, this is not going to have a happy ending. Like, how would you? I mean, this is not the stuff you see in normal markets. What part of that are you triggered by, or you want to respond to? Or you just want to ignore it? I mean, to me, it's
Well,
crazy.
the line you said at the beginning, it's definitely true that investors have been conditioned that they should just fade or ignore what Trump says because what's get actually implemented is far less, kind of impactful than whatever statement he makes in front of a microphone, right? So hey, we're gonna have 50% tariffs against Europe or whatever, right? The UK tariff was fascinating, George. If you look at the detail, that was a country we didn't have a deal with. It turned out we were going to we're exempting the first 100,000 vehicles the US gets from the UK. Guess how many imported UK vehicles came to the US last year? Take a
Other
random
than,
guess.
I mean, other than Range Rovers, I don't know, like 80,000. I don't know, not too many, not too many.
That's a good guess. It was 99,000,
There
right?
you
So
go.
so this is all like this is all like mental masturbation, right? In a way, right?
Yep.
So I think the point is like, you know, that you've learned fade this because maybe it doesn't hurt things. Another important point would be this might be a little detail, but the top 50 US equities were pretty immune from rising inflation after COVID. Their margins held in really well. They generally have big moats, they can raise pricing. And so I looked this weekend, the top 50 US equities are half the gross profit dollars of the S&P 500. So
Whoa, 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 whoa! Stop, press. The top
that,
50 stocks are half of the gross profits. You serious?
yeah, gross profit dollars, right? So the
That's
reason why
staggering.
that's why when the S&P can hold up and why the big companies rally, it sort of makes sense directionally. The smaller companies, like say 51 through 500, they're much less immune from rising inflation, and so they can't pass on pricing at the same rate. They can't handle the input costs rising. So if the big fear from tariffs is a swath of companies have to deal with kind of rising input costs, it kind of makes sense the big companies outperform, and it kind of makes sense the S&P as an index is superior to the economic data. So I don't. It's easy to crap on valuations and that kind of stuff, but when the rubber meets the road, like the top 50 to 100 U.S. equities are pretty damn good assets, in aggregate. And I think that's like I always have to remind myself that's part of the battle. And the S&P is a really managed index. I mean, I don't know if everyone listening knows this, but on average, 30 of the S&P 500 or 6% of the companies get replaced each year. The 6% of the new ones grow faster, are more expensive, higher margin, or better than the ones that kick out, right? Just think back, so what does that mean? Like 10 years later, like, a big chunk of the, companies that are in there weren't in there, and so I just think people have to remember it's a managed index. It's always going to look expensive versus history. It's higher margin than it used to be, all that kind of stuff. So that's like a vector of thing I have when you say that. That being said, I still think that there's a little bit crazy things happening. Like you mentioned, some of the coins. I would say Palantir's valuation stands out to me at 75 times forward earnings is something that can't end well. If you look at the history of companies that trade at that level, maybe somebody should start like an ETF called Nope. and and because that doesn't make any sense. There's no
Yeah, yeah,
historical.
yeah,
Yeah,
yeah. Adam,
this.
Adam, let me interrupt you. What do you have to believe? Because you're a
Yeah.
quant, okay, a
Uh,
quantist, right? What do you have to believe to justify the Palantir valuation? What set of assumptions do you have to make?
so I'm glad you asked. And for those listening, this was not a George and I think he would swear in a court of law as I would. We did zero preparation for this, right? So he did not. I did not tell him to ask me that, but we did publish something saying actually, what we did is we typed into Chat GPT '03, hit the deep research button, and we prompted it saying, "Hey, what do you have to believe for something to grow?"
Oh no, really?
What came out was around 40% top line growth for 10 years. And then we said,
Forty
okay,
percent for 10 years.
yeah, and then
Adam,
we said, which companies have ever done that? And then
yeah.
it thought for like 10 minutes and came back. It said a couple years each for Google and Amazon, and then, by the way, they were all from lower revenue levels than Palantir has now. So the truth is, there's no precedent that we can come up with in the last 30 years where a company has grown at the rate implied by Palantir's current valuation. So
Oh,
I thought that was pretty cool. And so like our point was like, yeah, there's definitely some extreme things happening. The reason I ended up writing a note, which is a little bit kind of company specific for what we do, is because this is really interesting to me. It's still in the mid cap universe. So for those who don't follow the
and Adam, what is the market cap now?
right, exactly. So I was just about to say a year ago, these things get rebalanced June 30th, right? And then you kind of stick with it for a year. So for context, if you kind of say, okay, well, it was 50 billion a year ago, now it's 315 billion. So in the mid cap range, it was probably like whatever it was, 8 to 55 a year ago. Now it's 315. So the problem is if you're mid cap growth PM and long only, it might be 8, 9% of your index. So nobody own that much of it, and so it's really hard for active managers in that index. So guess what happens on June 30th when they finally get rid of this ridiculous, thing that everyone's going to sell it. They own 2, 3, 4% for risk management purposes, not because they like it at 75 times forward sales, but just because they just can't stand underperforming because it's so big. So I think there could be a huge kind of bar fest in that thing at these crazy valuations. I think the large cap PMs are going to look at this thing and say, well, I don't need to be, it doesn't hurt me as much, given it's um there's so many other bigger things. So I think there could be an interesting like rebalance issue that finally like pops the bubble on this Palantir. So that's why I wrote about it last week.
The bar fest. I don't know.
Yeah.
That sounds so
Yeah.
great.
You love a good bar fest.
Yeah,
Yeah.
yeah,
Yeah. Yeah.
100%.
Yeah.
And
Yeah.
you know what's really interesting, Adam? You and I know this to be in the institutional world, but for a lot of individual investors out there, they don't realize that the index hugging and the game is so important to so many institutions, depending on what your mandate is, and the sort of crazy incentives that provides
Sure.
for various investors. And so these are the types of things you have to spend probably more time than you care to know, because people got to know what their benchmark is. And oh, Adam, what risk am I taking relative to the benchmark, and blah blah blah. I mean,
Totally. Everyone maximizes their personal wealth. And if you have an index you have to beat, that's what you do. I think another subtle point, maybe not everyone listening might think about, is it really depends on whose money you're managing and whether you're a public or private company or sovereign or not. So let me explain. Let's say let's say you're the CEO of a public asset manager and I'm running a growth fund. And most of these public asset managers have some $100 billion growth fund because in the last 10 years that's what's worked. You come to me and you're like, Adam, I'm the CEO of this company. You're running 100 billion. Let's say I'm blended at what, 45, 50 bips. So I'm generating 450, 500 million in revenue for our firm. The last thing you want me to do is screw that up.
right,
Even if you pay me some crazy number, let's pick an insane number, 15 million.
right.
You're still feeding $435 million across all these hundreds of other employees. Like you need me to basically roll my thing at NASDAQ. So you say to me, hey, Adam, I'm running this business. I don't care what you tell your investors, your LPs, we got to report every quarter, every year. Just keep that performance right in line with the Nasdaq, and just don't wreck my 450 million revenue business. Just grow it at 8 to 10% per year, like the Nasdaq does, right? But if you and I are working at a sovereign where we have permanent capital, then we try to really maximize our 10-year return, right? It's all. So I think there's weird incentives even on like whose capital you're running that can really matter for how you invest, and not
Yeah,
yeah.
yeah, Adam. As things have become more fragmented, segmented, whatever, hasn't in your career, well, say the last 20 years, hasn't this become more of a thing? It's just gotten worse in this regard. I
Well,
mean, the incentives.
I think so. Look, I mean, I've always cared about when I analyze public companies, what is the variable compensation of the C-suite? Meaning, like, do they have a salary and a bonus, but like, what makes them get a much bigger kind of bonus? Is it they hit some earnings per share metric, or is it the stock price itself, or which is a little tautological, but or is it some return on capital, return on equity metric? And you'll see when you read these K's in the footnotes, hey, if we get 10% earnings per share growth, CEO George Noble gets an extra 17 million in restricted stock units. Or you see that stuff. And so my view is that stuff always is motivating. And you'll see a lot of times buybacks happen because the management teams have per share bogeys, or if you and I have a ton of stock and we get dividend on the unvested portion of our deferred comp, we're going to love the dividend, right? So I think it's really important to look at that. And I think those incentives always matter to people, whether it's beating the benchmarks or whether how the management teams are paid. So I definitely agree with you. It's basic human behavior 101. People don't destroy their own net worth on purpose. So I'm a
Right.
huge fan of that logic. Yeah.
All right, so let's get into the weeds a little bit further
Yeah.
because you're a stock guy. Everyone likes it's like people like to talk macro, but it's like sports talk radio. You can spend endless hours doing it, and you get
Right.
nowhere. Okay, so what's a poor speculator supposed to do? So you controversially, very interestingly, and I know it's a sector with a lot of disparate subgroups.
Right.
You were talking about healthcare,
Yeah.
and Kramer's here. He was witness, okay? And so there's healthcare and there's healthcare.
Right.
So you can go from a melting ice cube, lawsuit afflicted Pfizer to McKesson
Right.
to HMO to UNH, whatever.
Right.
Okay, so could you talk about healthcare as a sector, and also I want you to weave in because we're going to get to it, the AI thing, which has been something that you've been watching like a hawk. We'll get to that as well, but
Yeah.
let's start with healthcare. It's never performed as badly relative to the market as it has been. Valuation historically cheap. It's a large part of the economy. The sector's not going away. Blah 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 blah.
Right.
So how do you think about healthcare? And where would you? And I don't want to say would you be underweight or overweight because it covers a multitude of sins. So let's drill down a little bit further. What do you think potentially is interesting in healthcare?
So I like healthcare, but you're right. There's a number of sub industries, from pharma to biotech to tools to services to hospitals to managed care to distributors, whatever. I'll, I'll start with why do I like healthcare? Um, because one of the biggest learning lessons I've had on Wall Street is bad good, or is bad, is bad bad, or is bad good because it's an opportunity. And I think this is one of the parts of the market where many businesses are incredibly poorly run. Right? You walk into a doctor, what's the first thing you do? They give you a clipboard and a pen, right? You have to be like, what the hell? Like, there's no, like, just the ability to be productive. So we screened a couple years ago for stocks that have lots of employees, lots of revenue, and low margins, and thought, if anything about this AI stuff is at all true, these are the businesses that will have the most margin upside. And we've seen across the stock market, whether it's Walmart or Cintas or Costco or anything with low margin where people believe margins can expand, are good stocks. So that drew us to the drug distributors, which are Cardinal Health, CAH, Cencora, COR, McKesson, MCK. And those have been pretty good stocks, actually, even this year. So, like, I know healthcare is, because of the market cap or whatever, and with UNH getting killed, but the distributors have been great. I also think there's some interesting parts of CVS Health and HCA that have been pretty good. And I kind of like the diagnostics. Like, it's a duopoly. And I think a company like Quest, DGX is a ticker, might be able to sort of have revenue growth for a long time without a lot of margin expansion. These are businesses where, remember when we were kids, George, they would give you like a microscope and you would put like that glass thing under it, and you would look at the cells. Like, they're still doing like that kind of stuff, right? So,
Right.
and then I think there's other businesses that should grow above GDP. That let's call it, kind of the Boston Scientific and Medtronic and Stryker, where they're kind of,
Sure.
yeah, and kind of the valves and hips and knees and that kind of stuff. So I think there's a number of little things. I think biotech itself is a totally different animal, and so I wouldn't claim to sort of know anything about whether an individual drug is safe or effective. But I would say that I think there's a bull case out there too. Heard a great pitch on Gilead the other day about, so it's a very idiosyncratic sector. I think stock pickers say it. Gilead's pitch was, I guess right now, this is always crazy when you say it out loud, but of people who currently have HIV, only about 50% adherence to taking the pills for it. There's a new
Wait. Say that again. Only 50% of
so
HIV guys take the pills. Is that what
yeah,
you're saying?
yeah, yeah. Only,
Yeah. Okay.
only. Oh, yeah. So they're not taking the pills that they should. But
Right.
there's a new product from Gilead that's just a semi-annual shot, and so
Oh,
that
that's
could
good. Yeah.
really, yeah,
Yep.
it could really
Yep.
improve
Yep. Yep.
this sort of adherence. So there's a lot, like, to me, when I see a company trading at 12 times earnings with a potential kind of approval coming, and it's sort
Sure.
of interesting. So I think it's an idiosyncratic sector also. And then let's get crazy for a second. I took an AI for healthcare course at MIT online last summer, and it was 68 hours a week for 6 weeks. So I don't want you to think that my 40 hours was
Wait. You 68 hours a week for 6 weeks?
6 to 8. Yeah. So
Oh,
so
6 to 8. 68. I
six
thought you
to
said
eight. Yeah.
68.
Sorry.
Go on, go on.
6 to 8 hours a week for yeah. So it was like 40 hours of total,
Right.
kind of content, and a bunch of geniuses or whatever. And I got excited about it. Now I have to admit, you know, I'm like the virginal guy who thinks everything's awesome. And if you were a grizzled healthcare veteran, you're going to say, "Oh, I've heard that thesis and I got burned by this." But they were talking about things that were so incredible to me. So I'll just give you one example, something that I think is really easy to understand for a non-healthcare person, which I am. Breast cancer detection. Okay, so there's something called dense tissue, and that dense tissue is associated with a higher percentage of higher rate of breast cancer. Okay, they gave 100 radiologists in Massachusetts a bunch of images and asked them to sort of tell them what percentage of the images they looked at had the dense tissue. It ranged from 6 to 36% across these 100, meaning even these really
Wow.
smart.
Adam, did you just move? Dilly, can you hear me?
Yeah, can you hear me?
Yeah, we got you. We got you. Go ahead. Go
Yeah.
ahead. Go.
E-
I think
e-
you just moved. Go ahead. Go ahead.
even even these experts aren't that precise. Okay.
Right.
So what happens when you're not precise? You do all kinds of things that are bad. You do proactive double mastectomies, the result of cosmetic surgery. You do all kinds of things, right? But if you think about it, women go pretty regularly for this imaging, and these AI algos now are incredible at detecting if it's dense or not. And so all of a sudden, type 1, type 2 errors go close to zero.
Right.
The radiologist can actually talk to the patients instead of reading films, blah, 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 blah. So it's just one very kind of well-trodden example. There's tons of data where they're already way better than human beings, the
Right.
algorithm. So
Right.
another example, shorter one is a lot of people are doing wearables now. They're wearing Aura rings, or they're having, watches or that kind of stuff. And if you kind of go and, you know, look at what's happening, they're
Hey, Adam, are you walking around? Adam, you moving? Dilly, you still there?
Yep.
and those
Hey, Adam, if are you moving around, Adam? Hello, Dilly. You think he's moving around?
Yeah, his service is cutting in and
Yeah,
out.
I know. He's
Can you
got it.
guys hear me?
Yeah,
I'm
Adam. I don't know if you're standing still or not. I think when if you're moving, it's screwing up. You got to stay still. Sorry.
I'm sitting at my desk.
Oh,
Yeah,
okay. All
I'm
right.
not
Whatever.
sure.
It doesn't.
Yeah,
It doesn't like you.
yeah,
Go ahead. Go ahead. Go ahead.
yeah. I got an incoming phone call. I think
Ah,
I
all
might
right,
have
okay. If
Yeah,
that
yeah.
that's what it
if that's
was.
all it is, just don't answer it. It'll just
Yeah, I didn't
yeah.
answer
Okay,
it.
all
Yeah.
right. So you were
But what I was saying is that gonna have these boxes now on the wall behind. I bet you eventually every new home, and those are going to be like wearables times 1,000, right? They're going to know you're going to be sleeping, George. You're going to wake up and you're going to get an email saying, get your bladder checked, get your whatever. It's going to really understand
wow,
your electromagnetic waves. And anyway,
wow.
so I'm wildly bullish about the potential for all this stuff on a 5 to 10 year view. And then obviously the real bull case eventually will be like Google's computational chemistry business, where you can check every drug and
Mm-hmm.
combine them, and the pipeline, the time to delivery of a new product will be good. So anyway, I don't want to sound like, the unicorns and lollipops or whatever, but I just think there's a lot of potential for improvement in a sector where we know revenue per share has grown every year, 25 years in a row for healthcare in the S&P 500, right? During COVID, during financial crisis, like there's a lot of old people need services, and like demand's steady and predictable. So I think there's a case to be made that this could be the best performing sector over like a 10-year view from today's level. But a lot of it's going to be combining healthcare and tech to get to kind of, to kind of get that
Makes a
done.
lot of sense. Before we get out of healthcare, I'm just one quickie because there's been a lot of dumpster diving going on in this name, and to me, it's a black box, so it's in the too hard pile. Do you have an opinion or any useful observation on UNH?
Yeah, I do. Um, so an investor who I respect, healthcare expert for many years, at a dinner 2 weeks ago um, he said, question came up, and he said, look, this guy is an accounting based healthcare expert, long, short,
Right,
like
right. He
really,
knows his stuff. Yeah. Okay.
he knows his stuff. Okay. And he was like, look, I've been trying for 20 years to understand how they make money, and I can't figure it out. And his view was like plot Pfizer for the last 30 years, plot UNH for the last 30 years. And UNH has captured almost all of the wealth of the healthcare system, right? Like general practitioners are basically middle class, like hospitals barely make any money. Like he's just going down the list of like where the value is. Pfizer stock chart's flat for 30 years, UNH is up 10,000%. So now it's up, it's down in half, but it's still way, way up over everything else. And so now a flashlight's finally being shined on it, and people are saying, "Oh, it's cheap," and his view was like, "I don't know," and it kind of affected me the way he said it because I just have so much respect for this guy's ability to understand the industry. So it felt to me like, yeah, maybe it'll double at some point, but it could be from a lower level. And I think the reason I've kind of pay attention to UH a lot is like I'm a small business and I'm in New York and we use United Oxford, which is basically a monopoly, and they've raised pricing on me 9% per year since I've been in business.
Yeah,
So yeah, so it's like I know they're going to make more money off me next year.
sure,
I don't expect them
sure.
to do, George. Say, hey, Adam, we're sorry we've been fleecing you, like we've been fucking you for the last 5 years. We're going to reduce your premiums by 40% for
Yeah, and
2026.
it,
I signed exactly zero probability to that,
yeah,
Adam.
yeah, Adam, and also like it's obvious. Listen, it's opaque, so it's hard to really know. So anyone who claims to really know, I think they're fooling themselves. But I look at numbers, profit margins, EV to sales, and then I look at the core businesses, whether it's the PBM or the Medicare Advantage stuff, and that's where all the lawsuits are coming. It's like, so if you wake
Yeah,
up
it's hard
one
to tell.
you wake up one day and a new neutron bomb went off on UNH, like, it wouldn't surprise me. Do I know it's going to happen? No, but there's easier ways to make my. I just think you're right. Yeah, it could double, but it could double from from
Yeah,
from
a
from
much
from,
much
from
lower
a
level.
much lower. Exactly. Okay. So Adam, as we're
Yeah.
speaking, we're moving along. So I don't know. Oh, by the way, hold on. Aside from Kramer, who we got in here, we have another special person in here. Adam, if you look down in the second row, I'm glad he came. His first name starts with an M. Maybe Kramer, you can use your good offices to get the guy in the second row on the left to weigh in. He's been in the Federal Witness Protection Program, but we would love to hear from you, Marco, if you could come up. Uh,
Oh yeah. Okay.
no, so yeah. Anyway, so Adam, I'm going to throw these things up in the nest as you're talking, but because these are a lot of great charts. I had them up before, but I'll put them up in the nest so people can see them. So let's go to small caps a little bit. You've made the
Sure.
case very convincingly that adjusted for style, and I'll put the graph up so people can see it. Adjusted for
Okay.
style, these things are not cheap. So could you just riff on that for a little bit, please?
Yeah, I mean, I think valuation, is look. I guess my quick response would be Motel 6 is cheaper than the Four Seasons, right? Like, so some of that is because it's just not a totally as good of an experience.
Okay.
Okay, right. And so, your point's right. Like, small cap growth universe is not really more attractively valued than large cap growth in absolute terms versus its own history. Small cap value is a lot cheaper than large cap value, but the reason is it's got a lot more low and increasingly a lot more low quality stocks in there. And so, I think it's one of those things where like I probably could generate more alpha in small caps. So I'm not saying you shouldn't have an analyst there. I think you should, but you can't allocate more. If somebody says, "Hey, Adam, I got $100 to put in U.S. equities, how much should I put in?" Large versus small. I think my answer back would be, well, the S&P 500 is 25 times as big as a small cap universe. So if the bench weight is 25 to 1 or something like that, then maybe you should do 21 and 5 or whatever. But you definitely don't want to own more small caps than absolute returns, in my opinion. And I think it's because they're inferior asset class. Now, could they outperform for stretch? Sure. They tend to outperform close to the bottom of an economic cycle when it's risk on, right? So if you think we're about to get massive, incremental fiscal stimulus or massive incremental monetary, if they expand the balance sheet, then yeah, it'll be a risk on trade. But like, I don't think it's really sustainably better asset class unless you're really bullish on, accelerating economy. And I think we're at the wrong side of the cycle for that, frankly.
And Adam, just bringing this back to what we were talking about before about the incentives. You said the Russ. I mean, forget the numbers. We all know, like 40% of them make no money and blah blah blah. But the entire market
But
cap of the Russell is like, what did you say it was, 2.5 trillion or something like that?
yeah, I think it's less than like three or
All
four
right,
individual
and
securities.
Nvidia
Yeah.
is back over 3 trillion alone by itself, right?
Yeah.
So like if you're running real money, you better spend time's better spent worrying about whether I should be in Nvidia or Apple or Meta rather than what, and I'm going to use a Yiddish technical term, schmata crappy little company, Parker Industries, like who cares? I mean, it's not in the index. I mean,
Well,
sorry, go ahead.
yeah, we have three companies that are over 3 trillion:
Yep.
Nvidia, Microsoft,
Mm-hmm.
Apple, and then you've got, the Google combo and Amazon and whatever. So like, I think I'd phrase that differently than you did, meaning like I think you should own a lot more of the companies I just listed than the small caps.
Yeah,
But
no,
I
we're
don't know
saying
if you
this.
could,
Yep.
yeah, I don't
You
know if
go.
you could generate alpha in the big ones as much as you can in the small. So it's like,
Right.
if somebody told me they were going to run market neutral, then I'd rather they did it in the small cap universe. If somebody told me, hey, I need to like amass the most wealth in my US equity portfolio over multiple years, then you got to own way more low fee, large cap for sure.
Right. Okay. Moving on. I'm going really fast here. I'll let
Yeah.
Kramer ask a question, but I don't know if this is not a democracy. So Kramer's allowed to ask questions. I don't have anybody else because you got a hard stop in 17 minutes.
Yeah.
Okay. So I put up people can see this, a really provocative chart. Blows me away. You know this chart, and you have many charts like this, Adam. It's the one to do with, people like to buy lottery tickets, especially individual investors. Okay, but
Right.
you have this great chart. The one I picked was, I don't know if you can see it's in the nest. It's over your head. High quality, low beta growth stocks outperform. You
Yeah.
show over a zillion years, this thing's up like 4,500%. This is low beta and high quality. It's kind of like, slow. The tortoise wins the race or whatever. Okay, as opposed to people want to buy the next, money losing 30 times revenues, crappy balance sheet. So, for instance, for those that look at the nest, you would think like high beta and mid quality. Oh, that sounds good. Like the markets go up over time. Beta should do well, right? No. Okay. And you go down the list. This is so counterintuitive. So, could you just tease us out a little bit, Adam, like
Sure.
low beta and high quality? Because I think we're trying to help people in the room here. Don't
Right.
buy the lottery ticket, okay? Don't, someone comes on and says buy Dilly Industries, and what's that? It's like it's this exciting product,
Hey,
and yeah, okay. No, no, no. Stay with the tried and true. So, could you explain that a little bit, Adam?
Sure. I mean, I'll give you a short answer is plot ARC and plot the Qs. ARC
Okay.
is a low quality hypergrowth junk, negative alpha proxy. It's down over the last 5 years in absolute terms. The Qs are up 130% last 5 years, right? So one is just a lower quality, hyper growth, higher beta version. And so sure, there can be a few weeks where it's totally risk on and ARC beats the Qs, but over time, that's the biggest hyper growth chunk negative alpha proxy. All right, said in like English, I guess, longer. The one minute answer is um, when the market goes, if you ask people, hey, what should you run your long only S&P portfolio, S&P benchmark portfolio at? What beta? Most people think it's above one. They think, well, the market goes up, so I should take that market return plus a little bit of bounce on top of it. That's wrong. It's actually less than one, and the reason is higher beta stocks have negative alpha, and so when the market is down
Wait,
ten
wait.
percent,
Say that again. People need to hear that. Higher beta stocks have negative
right,
alpha.
for
Okay,
a
got
lot of negative
higher
alpha.
beta stocks have negative alpha. Got
So
it. Keep
right,
going.
so people might not care in a big up year. So market's up 25% last year. You own a two beta stock. So let's say you're up 40. You say back to me and George, you say you pricks, I'm up 40, market's up 25, I win. And I say back to you, yeah, you dragged 1,000 bips of alpha because you had a two beta stock. What do I mean? Well, if the market was down 25, you would have been down 60, right? And it's the same two beta with the negative 10 alpha drag on it, right? So I think the point is everything is great when the market's up 25. But as soon as you have a choppier year, or actually any year we showed in our exhibit that's 10%, the market's up 10% or less, you really have to pay attention to, if you're gonna own a high beta stock like Nvidia or Meta, you gotta own something on the other end of the spectrum to balance that, right? You've got to make sure that your overall book does not have a super high beta. And that's the problem with some of these you know, hyper growth, products.
Got it. All right. So I feel like we're on the speed round. I got a couple more, and then I'll let Kramer get in here. But there's like I'm a huge fan, Adam. I know your stuff. We did the space earlier this year, so I'm just trying to tailor the questions to what I think the audience
Yeah,
is
yeah,
really up
sure.
for. Okay. So now let's move on to Mag Seven. All right. Go
Yeah,
back to
yeah.
where we started. Okay. So you had a really provocative chart. I'm going to put it in the nest where you show the increasing capital intensity of the Mag Seven, and what that implies for growth and cash flow margin, all that kind of stuff. And so, how the business proposition, before they were moats, how they cash generative, return a lot of cash to shareholders, low earnings volatility, blah 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 blah. Mm, Maybe that the winds are changing there. So, could you talk a little bit of why is that capital intensity item for the Mag 7? Why is that so important going forward, Adam?
Well, to me, capital spending matters if you're depreciating it really quickly, right? So if you and I buy the utility plan and we can kind of depreciate it over the next 50 years, then it's kind of smooth across 200 quarters. And I'm not going to see the depreciation burden on my cost of goods sold in the near term. But if I have the capex like these hyperscalers do, and it's only got 3 to 4 years useful life, and I thought the capex was 50 billion, and now it's 100 billion, which is what they all guided to in January, or a couple of them did, then that extra 50 billion I gotta spread over the next 4 quarters. So there's a gross margin here. And so I got worried earlier in the year that the business models were changing, that these businesses had kind of 7, 8, 9% capital spending to sales, and now it looks like they're mid-teens. And so all of a sudden, they went from software to energy or whatever, or I'm exaggerating, but I mean, the business model changed in terms of what the quote unquote maintenance capital spending was. And that means the margins get hurt for a stretch. And so that's why one of the bigger investment questions that it comes up, and it hasn't been recently, have they been rallying, but certainly earlier in the year, is like, what is the return on this incremental investment, and how long can they sustain this kind of investment, and are they going to really be able to generate returns that justify these valuations? And I think it all comes down to margins. And I think in the pocket here, the next 12 months or so, I don't think a lot of these businesses are going to have margin expansion. And so that's why, it made me go from like, kind of saying, hey, you got to be at least market weight for the previous 3 years to maybe you should be underweight. So what does that mean? If these things are 30% of the S&P 500, and by the way, the betas are above one, as you showed in that other exhibit, then all right, then maybe I should own 24% of my book, and then that gets me around the 30% on a beta adjusted, as opposed to owning 30 and being 40% or whatever, right? And so it was kind of more, these are riskier stocks, or increasingly risky stocks, and that higher capital intensity is telling me that.
Yeah, okay. I got more questions, but Michael Kramer, if you have a question, please have at it. Otherwise, I'll keep
I
going. Go ahead,
do,
Michael. Go
and
go
this
for it,
kind
Michael.
of
Go. Go,
it
Michael.
kind of segues in from what you were just asking him. So clearly, as the market, as Nvidia goes, the market goes. It seems, and Nvidia has basically been, in my opinion, dead money for the last year. And so, you being the former number one semiconductor analyst, I'm sure you still follow the name quite closely. I mean, what is your view on Nvidia, where they're how it's currently positioned? And the second question is at what point does the market begin to negatively look at the size of these capex budgets from these Mag 7 names?
Yeah, I mean, your dead money setup, I don't want to like, I, it's like, look, yeah, if you just bought it, one day a year ago and then held it all the way through, but it's been a volatile ride, right? I mean, it's gone from, you know, uh, whatever.
Yeah,
Yeah,
Adam, let me help here. It's point to point. There's lies, damn lies, statistics. Okay,
yeah. I mean, the thing went down 40% and is rallying
yeah, but
40%.
but I th- but
Yeah.
I think what's generally true. It generally true. The margin of outperformance, it's been negligible or it's been negative. I mean, it hasn't been one of these things where just pile a Mag 7 and throw the keys away and come back on
No, but his
D31.
NVIDIA question, like, well, all right, so let me take your
Yeah,
NVIDIA question at face value. Like, I'd start by saying, when you say it's as the market goes, the NVIDIA goes, that's actually not it, that exaggerated of a point. Like, let's morph the two previous conversations, right? If NVIDIA was 7% of the index and it was 2.4 beta, 7 times 2.4, right, makes this thing almost like an 18% position, right? Like, its beta is massive. So that's why I was making the point about how it goes from 140 to 95 to 140. So that exaggerated down and up and round tripping to zero. That's actually like me hitting home on what the beta means, right? Like, this thing does have a huge impact. It has, and it's semis generally, because I think Broadcom is the other kind of trillion cap company. So I think the answer to your question is this: compute is going to grow generally several percent above GDP for the next 10 years. This company has the best and leading product, has a CEO that's super promotional. If you want to spend 5 minutes thinking about it, Michael, go to the NVIDIA website, go over to the healthcare tab and watch what's happening. Jensen tells me he knows more about healthcare than anyone else. So kind of morphing three of our conversations: beta, healthcare, and semis. I think Nvidia probably grows above GDP for a long time. I think the challenge or biggest risk is that ultimately the hyperscaler spending does translate into their high end revenue. I think this last quarter was pretty damn impressive. I mean, even without 8 billion in China revenue, they still beat numbers. So I think this is the best company in an important above GDP growing sector. You just have to be mindful that it's cyclical when you make that assessment. But I mean, I don't think
Well,
I don't think it's that expensive versus other things, to be honest
no,
with you.
but Adam, let me pile on.
Yeah,
Kramer and I are going to tag team. Okay,
yeah.
so leave the growth out for a second. Leave the valuation out for a second. I mean, I look at those numbers. You're a numbers guy. I look at the margins,
Mhm.
and the first thing that comes to mind, being the wise guy, like how sustainable is that? And you may say, George, in the long run, it's not sustainable, but in the relevant time horizon, the next 6 to 12 months, it is because the orders are still good. Blah 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 blah. But you can chat GPT this yourself. 'Cause I'm not too good at chat GPT, but I tried this a few months ago,
Yeah.
and I asked it how many companies have gross margins over. I can't remember what I put in. All right,
Right.
and it was like very few. All right, and
Right.
so just like your question, who grows at 40% a year for 10 years? Like,
Right.
good luck finding. So same thing. Look at those margins. I mean, I think they even rolled over the last quarter a little bit. But forget about that.
Yeah.
I'm like, I look at that and I'm like, that's cruising for a bruising. Like, that's not sustainable. What say you?
Um. Yeah, 0.9 times what you're saying, 0.8 times what you're saying, 0.7. Like, meaning, like, look, they're a fabless company. They don't have manufacturing, so don't think of this as like Intel from back in the day where they have to like do the capex and build a factory by the tools. Right? It's made by Taiwan Semi, so they're going to be a high mark. Think of them more like a software company than a manufacturer. They still have cyclical margins because of pricing and
Right.
maybe strong pricing in certain areas, but you can maintain that for more than 6 months, right? And it could be much longer than that. And they don't have like a real competitor in the core product. Now they could eventually, and I think there's real tail risk both from China supply and China demand, to be honest with you. So I don't think what you're saying is absurd, but I think it's um, eh, look, there's a real scenario where this thing could have a problem with a competitor,
Okay.
and that's true. But I think it's more than 6 months. If
Yeah. All
people,
right. It's,
yeah,
yeah.
yeah.
Sorry. Let me ask a
George, can
question.
I just ask one quick follow up then?
Yeah. Yeah. Kramer. But Kramer,
So,
don't interrupt me while I'm interrupting you. Go on, Kramer. Go ahead.
so remember, Adam, he doesn't really let me get many words in. Um, so, you know,
Both of us.
expanding
It's
on
tough for
NVIDIA
both
a
of
little
us.
bit further, a step further,
Mm.
right? I mean, how does DeepSeek and the lower cost AI model figure into any of this, if at all? I guess is the bigger question.
No, it matters, but again, like you're not talking about the same competitive market for the upper end of what NVIDIA does, right? You're just kind of saying, my view is that when the DeepSeek news came out, my view was it was bullish because it kind of told you there's more, demand for compute's big and there'll be more, sort of need to, um, kind of use semiconductors. There's so much data being stored together. No, I will say, and I did this, George, maybe 3 weeks ago. We published a note where we typed into ChatGPT, give me, um, I said, let's assume NVIDIA grows 50% this year, 25 and a half next year, 12 and a half the year after, 5% above GDP long term. We gave it, told it how to oscillate its margins, et cetera, and asked it what it would earn in 2030. And it was pretty damn good, right? Like you can do pretty well on using it. I've been wondering whether I should launch coverage of the semiconductor sector with just no analysts. So I know this will blow your mind, George. You'll love this, but like, could I have an analyst-free research department? We actually did a call with our compliance team yesterday about whether that's whether that's legal, and they said yes. Right. So I think it'd be pretty cool if I could cover semis with
Why,
just
Adam? Why
ChatGPT.
wouldn't it be legal? Have more integrity than some
Right.
other sell
Well,
side departments that shall remain
yeah,
nameless.
yeah. I'll just publish. I can, as long as I disclose exactly what I put in there, and it was pretty good. And,
Sure.
and then I asked it, and I think this is the most important part. What do you think introduces volatility into Nvidia's one of the most important investment contributors for Nvidia, the revenue margins and stock returns? And it kind of went through. really well. Kind of talked about, blocked acquisitions, regulatory scrutiny, export restrictions in China, maybe competitive pressures from AMD, custom silicon, supply constraint. Like it was, I read it and it was pretty friggin' good already, right? Like, so I don't know. I think the answer to morphing your questions is this thing is going to be fine for the next 9 months on revenue. Eventually, it's going to be cyclical, and I think it is going to have a big impact
All
on
right.
investor thinking because there's tail risk from China, both demand and
All
supply.
right.
But you're talking about the
2
best.
minutes.
You're talking
2
about
minutes.
two,
2
is
minutes.
that an
2 minute warning.
that's an
All
Andy
right.
Jick.
So
That's an Andy Jick reference.
yeah, 2 minutes. Okay. So Parker, you're not getting out of here because I'm
Yeah,
right. So to tie this all together, so we
yeah,
talked about Mag 7, semi, small caps, whatever. You've got your cyclical calls. So just for the folks in the room, the home gamers, right?
yeah.
Whether it's sectoral, I mean, I know you don't want to get individual picks, but whether it's sectors, styles, cap, whatever groups. I mean, you like healthcare. You've what sort of groups are picks and pans for you? Like, what else would
All
you
right,
give? What other pointers would you give the folks in the room
all right.
in terms of how you look at the market?
Shameless plug for those who are individual investors, right? Go to
Uh,
trivectorresearch.com. It's $100 a month. We have,
Trivector research and
yeah,
just promo code George. Adam doesn't know this yet,
yeah.
but put it, my Adam. You got. I don't know what the promo code's going to be, but get your guy to change promo code George. Give him a little discount. All
Yeah,
right. So
yeah,
go ahead.
yeah. The
All
100,
right.
100 is a 100 month is the discount.
All right. There you go.
But
Go on.
look, I'd say one. I get a lot of like people like non-US over US, and I disagree with that. I think the US has a superior set of assets. I don't think you should be spending too much time owning EM or European equities over US if you're investing long term. Yeah, I love the healthcare space as I mentioned. I think if I'm right that we're going to get a little bit of a choppier stretch here, I like the aggregates, things like Martin Marietta, Knife River, a Vulcan. I like Waste Management, Republic Services, Waste Connections. Things that they might not be cheap, but they have above average estimate achievability. No China, no tariff, kind of steady demand. I still like the drug distributors because I think they can predict where their employee and customer behavior better. So they're like a new kind of defense. When you and I were coming up, it was more like you buy Procter and Gamble and Pepsi, but they just both missed for the first time in a quarter, I think, in my whole lifetime. Right. So the
Right.
kind of staple concept is different than it used to be. But we kind of walk through this. And we also do a lot of like ETF analysis where we tell people we're doing like the Dave Portnoy style, like these ETFs are bad and these are good type of thing. So people can check it out. And George, I'm happy to jump on again anytime. Let me know. We'll talk soon.
No, okay, hey, Adam, thanks so much. It's
All
been
right.
terrific.
See ya. Take care.
Dismissed. Now we get to talk about you. Okay, cool. So, Michael, man, I love Adam. I mean, I always agree with him, but he knows his stuff. I mean, I guess you went here on the opposite side of the aisle vis-a-vis Nvidia and some of the semis. No, Michael?
Uh, yeah, I don't know. I'm skeptical of Nvidia, but I've been wrong too. So, um, you know, it just seems to me like it's trading at the upper end of the range right now. And you're while you can pick and choose where you want to talk about it. To me, I just look at where it was in June of last year and look at where it is today, and
Yep.
you really haven't benefited from it. And
Yep. That's fair.
typically, I mean, in my experience, when companies report really good news or what's perceived to be really good news, and they don't go up to a new range, it kind of tells you that the market doesn't really. It's not meant to last, and that you're going to start going down the other side. I just remember that from owning Gilead for years in 2015 and 16.
Mm-hmm.
So, that's my sort of takeaway on it.
Appreciate it. Go to Rusty and then Deer. Rusty, what you got, Rusty?
No, I mean that kind of what Michael said there. That was a great position. Nvidia is it's just that one of the head scratchers right now. But no, I loved it. That was amazing.
Yeah, what I like about, I mean, it's what do they say, liars figure, but figures don't lie. I mean, you look at his work. I mean, the thing that blew me away, I put it up in the nest, the one that says, buy low beta, high quality, whatever. Like that's so, like everyone wants a story, right? Well, low beta and high profitability, whatever. Like that's not terribly sexy. Everyone wants a story, sex, drugs, and rock and roll. So a lot of earnings volatility, bad balance sheet, aggressive, yada yada. But slow and steady wins the race. So, hey, Rusty, I got a question for you. Going to totally change the subject. You're a sports fan, right, Rusty?
Yes.
Okay. So this isn't potential. And by the way, we're going to make this room go. So I got really pissed off the other day, and Dilly knows I got to control myself. I'm always finding something to get angry about. But anyway, so here's the new thing. So yesterday I was going to bring this up. We didn't have enough time. So something was going on about Elon Musk. But you know, Rusty, they don't call him Elon Musk. They call him Elon. Okay. Now, I'm not aware that Elon was so intimate with so many people. So, why do they call Elon Musk Elon? Why do they call Michael Jordan Michael? Why do they call LeBron James LeBron? Okay. They don't call Donald Trump Donald. All right. So I'm guessing it's got something to do with whether they like the guy or don't like the guy.
Well,
So, and
It's like
so
falling in love
Rusty,
with a stripper, George. They just think that they know them.
is that what it
Yeah,
is?
yeah.
Rusty, what do you think about this?
well, Ivana used to call him the Donald.
Well, okay, well maybe because he's a Trumper. That's right. But what? But imagine someone you don't know. I mean, like I don't get it. I just don't get it. I mean, I think it's meant to be as it's something they like, but I don't know. It's one of these bogus things I can't stand, Dilly. I'm sorry, I just can't stand it. All right, so where were we here? Deer Point, Deer, you got something? You got thoughts, comments, reactions to what Adam had to say?
Yeah, 1 second, George. Just buying a Blizzard. One moment.
Wait a minute, is a Blizzard North Carolina or there's a Blizzard car or truck?
No, no, no. The Dairy Queen, dude.
Ice
There you go.
cream.
All right. Oh,
Yeah,
ice cream.
that's
Are you a DQ guy?
I am a D. Well, I mean, not particularly. It was just close. So
What kind of
By the
blizzard?
way,
I gotta know.
thank you. Reese's. It's always about
oh
Reese's.
man,
He's supporting Warren Buffett.
Buffett owns DQ. By the way, this is Dilly. This is another topic for another space. I've done a lot of work on DQs. Okay, I have my reasons, but I was looking by state where the franchises are, and it's amazing. Like, there's tons of them in certain places, and not so many in the other. But not for now. So, Dear, other than we're
Okay.
jealous, and we want you to share your Blizzard with us. What else do you want to talk about?
Yeah. So I mean, thank you. I feel like maybe I'm wrong here, but I mean, I feel like at this point you have to have some EM exposure, right? Like, I mean, this is just kind of the way that I'm looking at it. Obviously, just given the backdrop and where the dollar is and so many other factors, I just feel like, EM gets bid here and not being I'm not saying you need to be, continuously invested in EM, but I do think right now is kind of a time to have some diversification in EM, at least on a rotational basis, right? Take some profits from the US and, have some EM exposure, but I'm not sure if anybody disagrees with me there.
So I'm going to weigh in here now. I gotta shamelessly plug the conference we're having on Thursday. Dilly, you got to be really appreciate me. I haven't plugged it too much, all right? But Jay Pulaski, who is the keynote speaker, who we've had in space, we had him on YouTube. He used to be the emerging market strategist for Morgan Stanley. He speaks really well. He's the guy who said, I mentioned earlier, his superpower is ignoring what comes out of Trump's mouth. All right. He hugely, hugely, hugely agrees with you. All right. So it has to do with the dollar going down. The more fiscal impetus coming from elsewhere, underowned, the charts are looking better, goes on and on and on. So I totally agree with you. And so let me just, before we go to the next comment, so we have Jay Pulaski on emerging markets, Ian Harnett, who we've had before. It's been a while in spaces on Europe. Mark Cahotes, everyone's famous short seller. Dilly, I know you have an opinion about him. He's going to come in and spread some. I don't know. He insisted he gets moved up in the schedule. He's got something he wants to talk about. I don't know what it is. Michael Howell, no one better on liquidity than he. The U.S. may win the trade war, but it's losing the capital war. And then we've got Tavi Costa, no one better on precious metals and gold. One of his funds is up 88% last I looked. Jordy Visser, who we've had in this space, fabulous. You want to hear about Bitcoin and AI and all that kind of good stuff. Again, what I love about Jordy is he's also TradeFi guy. I think I said it right, or TradFi, whatever it is.
TradFi.
So TradFi. I'm trying to be cool, Dilly.
Traditional
Tra-
finance.
Traditional finance. I know.
Hmm.
I know.
That's
So so
you.
so Dilly has so not to so Jordy has cred in both TradFi and the AI and the Bitcoin. So he straddles both worlds. Then the senior ranking energy analyst on the street, Mike Rothman, been doing this since the 70s, used to be at Merrill Lynch, was number one rated AI for years and years and years. And then one of the foremost housing analysts, She's my new favorite. Melody Wright, talk about housing and real estate generally. Louis Gav, emerging markets, China and tariffs. John Roque, everyone's favorite technician. Love to hear, we come for the charts, we stay for the stories. And then finally, Stavros Treaties, Mr. Greek, who we've had in this room before, talk about markets globally. So 9 to 5:30. It's virtual. Replays will be available within 24 hours. I will say, without hesitation, this is the best independent research conference that's ever been held. I actually think it's the best research conference that's ever been held. Better than Morgan Stanley. See if I can trigger Marco. He probably won't get triggered. Probably agree with this. Better than J.P. Morgan. Better than Goldman. The reason I say that is these are the best analysts, or one of the best analysts in every particular area, as opposed to most street firms where you get all their analysts, good or bad. So, but I digress. Um, so Dilly, what do we want to talk about now? I got other stories for you, but what do you want to talk about now?
We could talk about you buying Bitcoin.
Dilly, we got to have this. We have to have this convo offline. This is. I
The
feel
sigh. The
Dilly.
sigh
She
that
does
came
it every
after that.
I
time.
know. I know.
Literally, like the
Dilly,
sigh.
Dilly, Dilly, Dilly. You know, like when you got some guy checking you out, they're on you or whatever. Okay,
Yeah.
okay. So
Mhm.
let's like Rusty could speak to this. I'm feeling this pressure. It's like she's stalking me. It's like I don't know if I can resist much
You're
longer,
my
Dilly.
prey.
I don't know if
Yeah,
I can resist
she
much
is.
longer.
She's a stalker.
She
She is a
is.
crazy stalker.
I know. It's like it's horrible. Oh my god.
Wait, George, you got red pilled or
Dude,
orange
he's
pilled? What's it called?
yes,
I don't
orange
even know
pilled.
what it's called.
Orange pilled.
She's putting up my food everywhere. It's just horrible. It's like I don't know, Dilly.
George, just wait
I'm gonna
until
make a
Peter Lynch
Bitcoiner
finds
out
out
of
about
him.
this. He's going to be disappointed, George.
All right. So,
What's
so,
the
Di-
intrinsic value of a Bitcoin?
so Dilly, I know, dear. Don't try to out George. Dilly, you and I have to have words about this offline. This is not a conversation we hold in public. All right. Um, I thought you respected me more than that, Dilly. Like, what does our relationship come to?
You just teed me up though.
I know. All right, so Dilly, I have a bathroom story for you. Another one, okay?
Oh, good. Oh,
Okay.
good. Like
It's
we'll
like,
pivot from that to
yeah,
this.
as
Okay.
I try to change the subject, just get away from
Yeah.
the Bitcoin. Okay, so where I live, my partner, they renovated the bathroom here. Dilly, this is a real problem. Women don't have this problem, but for guys, it's a problem. Trust me. Yes, it's another peace story. Okay, I don't know
Oh
why.
God.
Okay, it's another
Why
one.
is it
Okay,
always that
it's another. I know you'd like
He
this.
doesn't want to talk about Bitcoin, so
I know.
one?
I know. Rusty wants Bitcoin. I want to talk about taking a leak. All right. So let me tell you what happens. So you know these like Japanese toilets that go up and down and everything, and they're
Yes,
okay.
the Toto.
Okay. So we didn't get the Toto. We got the
Yes.
Kohler. It's the same deal, right?
Okay.
So here's the problem, though.
Does it have like the fragrance and
Yeah, it's
does
got
it
that
do
too.
like
But hold on. But
okay.
this is maybe somebody should ask Rusty.
Is it heated?
Yeah, it's heated. Okay. But here's the
Okay.
worst part.
Mm-hmm.
Women wouldn't have this problem, but Rusty and we would have this. I have this problem. So the way it works, all right, you go in and it's got this motion detector, all right. So it picks up like if there's anyone near the thing, the seat goes up, all right. Okay.
Yeah.
So I gotta go and do my business, right? And here's the problem: if now, honest to God, it doesn't
Did
take
it shoot you in the face?
like I swear to God, there's a problem with the timer on this toilet because what happens is it's set for you can't change it, Rusty. It's set for
what? You can't change it.
listen, listen to this. Listen to this. This is
I'm
bathroom. This is
dying.
bathroom talk. By the way, is the room size growing now? Like
I love that your room is like the space was so
I know.
serious, and
Well,
now we're talking about this.
but Dilly, we haven't had Dilly. We missed you. We haven't had a DJ in space for a while. All right. So,
I
so
know.
anyway, so Rusty, here's the problem. So like it's time for 3 minutes. So once the seat goes up, after 3 minutes it goes down. Okay. Now
Is it
Rusty,
like a slow elevator?
Rusty, the seat goes up and down. So imagine, picture this, Rusty. Dilly might know about not maybe Dilly could imagine this. Rusty, imagine you're midstream and the seat comes down.
Oh
Oh
no.
yes, oh yes, oh yes,
Oh
oh yes, oh
no.
yes. Okay, so Rusty, so Dilly, you know what I have to do now? So that was like, all right, you know what I'll do? I will. I'll
You got to wave something
well,
in
no,
front of it so it
I
thinks
figure
you're
you know
there.
what. So Rusty. So I'll use one of my hands to hold the seat up and just aim with the other hand. All right. And then I was like, well, I don't want to do that. So then I'll figure I'll wave at it. Okay, that doesn't work. Then my partner tells me, no, the problem is the camera's on the floor, so you got to like kick your feet around, anything to keep the seat up. Yeah.
Ah.
Anyways, this is my latest bathroom story. So enough of that. All right. So okay. So now let's talk about food. So Dilly, we didn't have a chance to talk about it. Let's talk about the food. Okay. So between the taco
Ooh,
trade, the tuna trade, the burrito
and burrito.
trade, and there were others I don't know.
Yeah.
I mean, like, what is Rusty? Like, have you heard other ones besides those
Oh,
three?
that was the pizza day too in
It was
Bitcoin.
a
So
pizza day. What?
yeah,
Oh yeah, we had
yeah.
pizza
What
day.
was that about?
A
Oh, but you're
guy who
gonna be.
bought he bought a pizza
So it was
with
the
10,000 Bitcoin.
yeah, the first actual like
First transaction
exchange
ever.
of Bitcoin for something. So first like
Yeah.
payment was a guy spent 10,000 Bitcoin on two Papa John's pizzas. And so it's every year we have Bitcoin Pizza Day.
Yeah.
And so we just celebrated. I had Papa John's pizza in celebration of Bitcoin Pizza Day. And I will say, George, I know you're gluten free too. The gluten-free pizza from Papa John's is not it. Do not waste your money.
Right.
It was
George,
terrible.
that's a
Terrible.
billion, over $1 billion, by the way. If you
Yeah.
Wait. Rusty, what's $1 billion? Sorry, I didn't
he
get that.
spent
So
10,000 Bitcoin to get two Papa John pizzas when it was next to nothing, never heard of. He called and
yeah.
said,
So
"What?
the
Anyone
first
take
transaction ever.
10,000
Oh
Bitcoin
my god! So it would be worth $1 billion now if he hadn't
Yes.
spent. Oh my
Yes.
over a
god!
So
billion?"
he originally sent somebody overseas, I believe it was 10,000 Bitcoin. So he transferred it to a friend. That guy called in and paid for the pizzas, and the pizzas were delivered to him and his kids.
Whoa! So is
Hmm.
this so? What does this guy say about it? Like, is he
Oh,
regretting
he
it or?
had a super depressing look on his face when he talks.
Oy,
I
oy.
don't know though, because like it's the thing is that was the first actual like verification of like use. Like so really I don't even think it's like that bad. There are tons of people that bought drugs for like an exorbitant amount of Bitcoin like on Silk Road and stuff like that. Like I just think that the pizza thing is like worth it.
Right.
It was the first real purchase.
Wow. Okay. So all right. So what else? What else? So this. Wow. That's probably the world's most expensive pizza ever. All right. So speaking
Yeah.
about Bitcoin related things, I put it
Yeah.
up. I put it up in the nest. Okay. So Dilly, no, Dilly. I just want Dilly. I'm reminded of the saying. There's what's said, and
Michael
there's
Kramer's leaving. He doesn't want to talk about Bitcoin
well,
with us,
Kramer, go.
George.
He left. He left. Kramer, come back. Kramer, come back. You got a
He's
hold
gone.
on me. Kramer, come back. Anyway, sorry. Um, I'm punchy today. I haven't eaten
Oh
it.
yeah, you are.
I haven't eaten anything. I haven't.
We're really gonna talk about bit bonds?
Yes. Well, just for a
Oh
second. No, no,
God.
just for a second. Just for a second. And
Okay.
I need you as my brand manager to coach me on this. Okay.
Yeah, I can help you.
So I posted in the nest. It's in my feed from GavCal the definitive piece on why Bitbonds is a total pile of shit. All right. And this has nothing to do with one's opinion on Bitcoin. Okay. So Dilly, I was starting to say before you pulled a George and interrupted me. There's what's said, there's what's said, and there's what's not said. And there, what is not said, as the saying goes, is more interesting than what is said. So, Dilly, read between the lines. Don't get excited. But when you say, George, you have to buy Bitcoin, and I say nothing,
Hmm.
think about it.
What did you
So,
already buy?
mm, no, but you didn't hear me arguing with you. So
George.
I'm waiting for the pullback, Dilly. I'm waiting for the pullback.
George, I'm on the edge of my seat right now. I'm about to fall off.
No,
What did you
I'm waiting for the correction. So,
what?
no, the Bitcoin, you'll tell me when to buy it. I can't buy it now.
Oh, yes you can. What do you mean? You
No.
You
dollar
buy it.
Oh, George, you dollar cost average into
Oh,
it.
God.
Listen.
I
This
got
is
to you.
Listen, you have to start high. You got to buy all the dips. You buy all the rips. You don't like this
You
is not
buy.
something you
Buy. You just.
time. This is
You
not
own it,
something you
George.
trade.
It's different.
George, You buy the dips, you buy the rips, and everything in between.
Hey, Dilly, you know what? If we talk this up a lot, we can. You know what? Only tonight, I will allow this to become a Bitcoin room because we're losing altitude here. We're down to 113, so I'm getting desperate here. So if you want to make it
We
a
need
big,
to have no, we need to have a real Bitcoin space, not tonight, but like a
George,
different day.
I don't understand. Like, you've got Jordy Visser, who's a friend, and I mean, he posts daily almost about.
well, Rusty. Truth be told, it's between Jordy and Dilly. Like they're wearing me down. Plus, the other thing too, don't feel too badly for me. I mean, I got gold. I mean, that's my biggest thing, so I'm
No,
doing okay.
I,
So I'm doing
But
okay.
imagine a fixed supply. Like imagine like a fixed supply, George.
Oh God,
It's a magical thing.
Dilly, I can't
I
imagine.
just the
Dilly, I
army.
can't imagine what it's like someone dating you. Like the way you put it, it's like, oh my God.
They don't
Um,
survive.
Oy, oy. So anyways, today was Bitcoin Pizza Day. All right, what else? Oh, I know what I wanted to talk about. So this is actually a really important subject. So now we're going to get serious again. And I don't know who wants to come up, Rusty or whatever. This is an important subject. So the thing the other day with Ukraine, all right, I got it, Billy. Yeah, we'll close this thing in 5-10 minutes. The other day when Ukraine went in and took out all those Russian planes, um, this is a big freaking deal. I mean, is Louis Gov? By the way, Louis Gov, I'd spoken extensively in advance of the conference on Thursday, and we're talking about the importance and the value of American defense and what is it worth to our allies if they can't trust us. Be it, but he also had a great line. It's like, how much are you going to pay? Like U.S. defense, used to be the thing, right? But if you can blow things up with drones, like how much is it worth? You have $1 million missiles trying to attack $1,000 drones, which are going against $1 billion ships, something like that, right? So the question I have, and Rusty, put it to you first. Anyone else who wants to answer this? There's soft power and there's hard power, and part of the U.S.'s influence comes from the fact that we're the global policeman, and we spend so much in military and all this kind of stuff. But if all of a sudden, Rusty's kid in his garage, with a soldering cell, like back in the day, he had those model rockets. I don't know if it's still a thing. But if we could just make some drones and make them go up and take out, huge targets, like it kind of renders, useless or impotent or less important hundreds of billions of dollars being spent on military every year. So I know Nicola wants to answer this, but we'll go to Rusty first. Rusty, you got any thoughts on this?
Well, I mean, that's kind of where the space is moving, to be honest. When you look at it, it really is. I mean, that's why there's so much focus, with the spending into that area of, training it from the computer standpoint, drones and everything else. But yeah, it's going to be a new world of fighting.
Yeah, and so what I kind of wonder about is it makes the U.S. like less. Other countries are going to be more inclined to go. Won't value the U.S.'s alliance so much because it's like, what's the U.S. to forget about the politics? It's like if it doesn't do any good against these drones, it's like okay, so Europe doesn't.
It's not that. I mean, you've got to still be able to control. You got to control regions. You got to control
Yeah,
territory.
that's true. I'm just saying all else equal, which it's not. But I think you have a very good point, Nicola. I think you're triggered by this. You want to say something, my friend? Nicola,
Oh
mute
yeah.
yourself. Nicola, mute yourself.
Oh yeah. Oh yeah, George. I'm triggered. I'm brewing up a comment as we speak.
Okay.
I just want to let you guys know, who is backing Ukraine? Who is it that who's intel and best of practice military military operations? It's the US. The US did that to Russia through Ukraine. And I don't want to take anything away
So
from the Ukrainian people. They did amazingly. But to the idea that drone warfare changes everything, it's true because we have
right.
implemented drone warfare.
Yep. No, no. Yeah, Nicola, I think you're totally right. I was reading something, maybe the same thing you read was pointing out was yesterday. Like, there's no way Ukraine did this without our help, or actually, or Ukraine being the Trojan horse for us. So I'm totally with you on that. But I think both are true. Yeah, they did it with our knowledge, and also, but then also coming back to the issue of like, what does it mean for U.S. hegemony, and what does it mean for how much we should be spending on defense? I mean, so because like I think we'd also agree, aside from these drones, I mean, a lot of war going forward is going to be fought, in financial terms, cyber terms. I mean, it's not just your traditional classical, who's got the biggest armies fighting on battlefield. So I don't know, Nicole. It makes you. It's not to do with politics, just the way the technology in the world's moving. That's all. So I don't know. It's interesting times we live in. That is for sure. All right, Jilly. I know you got to run soon, but what else we want to talk about here? Because Jilly, I'm learning from you to keep these rooms shorter rather than longer. Oh, I have a question. Anyone can answer this. Jilly, Rusty, Nicola. So I put the replays of this up. They're up on Twitter, but they're also on YouTube and Substack. And if you join my Substack list, you get them emailed to you. But I had a couple interesting conversations with people lately. I'm not too good at these podcast things. I'm challenged. Guy was telling me I should upload them to the podcast app because that's the way people consume podcasts. So I don't know. Does anyone have any opinions about the way these replays are sent out over social media channels or not?
We should get people to comment down below uh, if they listen to the replay and how they're listening it.
And how
How
yeah,
they
how they would like to listen to
Yeah.
it.
Yeah.
Because I was told that if
Why don't we ask people to do that, and then we'll get some feedback to make
that would be
better decisions.
really helpful. That'd be really
Mhm.
helpful.
Yeah,
Because
just do a question, George, out to the masses. Is probably the
yeah,
easier.
take a poll. Yeah, I'll do that because I understand if you use the podcast app or Podbean, and there's like 3 or 4 of these things. Once it,
Well, I
sorry, go
jump
ahead.
around.
Go ahead. Go ahead.
I jump around for different, outlets. It just depends. So
Yeah,
that
I do too.
Yeah, but what they were explaining to me, like if I just put it on YouTube or Substack, let's say, you got to go to YouTube, you got to go to Substack, blah blah blah. But if you go to one of the to this what this podcast
Oh,
app
it's
is,
like a
yeah,
funnel.
it sends it to all of them at the same time. That's what yeah, it's a
Oh,
funnel. So I thought
I
that.
don't know about that.
I don't either, which I thought you guys would
Sounds
know. Yeah,
interesting.
that's why fascinating, Dilly. Fascinating. By the way,
Truly.
sorry, we're not going to go there, Dilly. Um, by the way, I have not been in that other space that should be not be named for weeks, and I don't know, and I don't really care. So anyway,
Do your brain cells
yeah, but I started to get
like
brain rot from the bit
are
bonds.
they
No, the bit bonds. I had
oh
a setback with the bit bonds. And by the way, you know what? I invite anyone and everyone to give a measured, polite, intelligent response to the bit bond piece that I put up that comes from GavCal. I mean, this has nothing to do with Bitcoin. We're talking about bit bonds. It's a complete pile of shit. Makes no sense at all. I'm all ears if anyone wants to explain to me
I don't know
why.
why you're so against it, George. Like,
Excuse me.
he's coming around.
Sorry,
I
what'd you say, Rusty?
I don't know why you're so like hard against it.
Oh, I can tell you why. If you read the note, it's pretty simple. One, people say, well, you're guaranteed to break even over 10 years or whatever. So the first thing is you're only getting a 1% coupon for 10 years off the bond, off the treasury, because you put 90% into treasuries. You're getting 1% instead of 4.5%. All right, that's one.
I'm talking
Hold on, let me
about
keep
the
Rusty. Let me keep going. Let me keep going. Then, if you look at the way you then participate, you get depreciation. The 10% gets put in the Bitcoin. You get depreciation of all that. Fine. However, once you get up to 4.5% total return over the 10 years, you only get half of the Bitcoin return. And then beyond that, you could yourself create that structure. You could, let's say you had $100, you could put $90 into bonds, $10 into Bitcoin, and you'd be much better off. And the last thing is, Bitcoin would have to go up 13 times. 13 times for this to be a better deal than just buying the 4.5% treasury bond. So it's pretty simple. It's got nothing to do with the price of Bitcoin. It's an inferior, it's an inferior asset, no matter how you describe it.
talking about the treasury version. I'm talking about just in general. Any
Hold on just 1 second, please. No, the bit bonds, because Rusty, because it's a structured product, they're ripping off the retail investor. That's why I'm so against it.
So are you against the what I'm getting at is you're against the version that was laid out with US
Yeah, I think he thinks it's like just like a scam.
It is a scam.
Yeah. And he thinks that people could do the exact same thing on their own. without if
And you'd have much
if
better
they
return. And you had much better returns. So like
right.
someone says to me,
No,
well, so
I listen. What I'm curious about is like if you did this at a smaller scale, though, George, and you structured it as a municipal, what would you do?
still, it's a bad deal because again, if it's a municipal bond, like so say you live in Texas, okay, so if I have $1,000 to invest, I just buy $900 of the Texas municipal bond, and I put $100 in the Bitcoin, and I would have much better returns than the person who buys the bit bonds. So it doesn't make any sense, Rusty. I urge everyone to go read the note. I mean,
No,
everyone's entitled to their opinions, but they're not entitled to their facts. I would like to learn from somebody if they could explain to me where that analysis is wrong. And what I really go batshit crazy over is I go in some of these Bitcoin rooms, and there are people who remain nameless, but they're taking shots at me like I'm illiterate. I mean, Rusty, listen, I believe know a lot about finance. You know how structured products can often be and usually are ripoffs, like the street's got its hand in it. Okay. It's exactly what this is on steroids. All right. But you have people who know nothing about finance, and they're going on about this is revolutionary. Actually, I tweeted it out the other day. It's like, we're going to capture the volatility in the Kager and this and that. I mean, I wanted to like shoot myself, Dilly. So it's the bit bonds, which are just complete
Yeah.
insanity. Financial illiteracy is a thing. All right. I mean, it is.
no.
Yes.
I built a lot of CLOs, and they are very yes. They you can do a lot of screwy
For
things with
sure.
them.
So Rusty, you could imagine. So Rusty, do me a favor, since you're more sophisticated. Actually, if you've done those CLOs, you're even more in the weeds than I am. Go read the note that Gavcal wrote. The people who mention bit bonds should be ashamed of themselves. Seriously, it's embarrassing how stupid they are.
Well, it's just, I mean, I'm just saying, as in general, is all I'm getting at. Is I think there's probably a way and a method. I'm not saying to do this with full weight of the treasury, but there's coming products. It's occurring. There, people are making them regardless, and so that's what I was
Yeah, no,
asking about.
and I can accept that. That's fine. All I'm saying is, that there was this quote unquote white paper written by this knucklehead at New
Right.
Markets or whatever, and they're hailing this as if it's someone just invented fusion or something like that. This is a miracle. This is complete idiocy. It's stupid. All right, it should be. All right, I mean, it really is. And anyone who parrots this stuff, again, don't take my word for it. Go read the paper. So anyway.
No,
Anyway,
I
Dilly, I think we've done enough damage here. Anything else, Dilly?
No,
All
no.
right.
Yeah, I
So
think we've
so
done enough
so George
damage.
is buying Bitcoin.
Yes, we have solidified that George
Dilly and
is
I are going to have words about this. Okay, so you're all going to
mhm.
miss me because tomorrow, in preparation for the conference, I'm not going to be on. Thursday, I got the conference. Friday, Dilly, maybe if I have any energy, we'll do a late Friday one. But we've got some good spaces in store for you next week already. I think we have Adam Taggart one day. We have Rudy Havenstein, who's that's not his real name. He takes the avatar name of the former finance minister of the Weimar Republic, and we have some.
Ooh, an anon. Okay.
So we have three really good speakers next week. So anyway, if any of you want to come to the conference, please sign up. It's going to be terrific. So anyway, thanks all of
Already
you. Thanks
did.
for tuning in, Dilly. You and I are going to have words offline. Take care. Bye. Bye.